they've shorted more than that of what actually exists in the float. So if the laws of supply and demand don't get fucked with again like they were back in January, that would mean that whoever has the remaining shares gets to name their price, because that's how supply and demand work. But as we've seen in the past, there's been some disregard for it. But you do that shit again, and no one's going to want to play in the casino. Because if I win $1 million and get to go cash out, I win on the fucking roulette wheel. I go and cash out my little fucking whatever the fuck it's called. I get my $1 million. I walk out. I go fuck strippers and do blow. Someone else wins 20 million. They do the same. Someone wins $1 billion. And when they go to cash out their waiver, is that what it's called? Oh, fucking, I can't remember. If they go and try to cash that out, and then the staff say, yeah, no, we know you won, but no. And then they try to blame you because you played the game and you won more than we could have ever imagined because we didn't have the foresight to keep track of, these are possibilities. Voucher, thank you. I'm a fucking idiot. If they go and try to cash out their huge win and the casino literally tells them, no. You tell me what everyone else in the casino is going to do.
Hi Astro. Love the stream. When MUAS happens, which do you think will run first, AMC or GME?
Doesn't matter. They'll run simultaneously. If there is any delay between the two, it's going to be fucking nanoseconds. These are being traded at the same time. I have the suspicion that there's a private ETF of some sort, or some strategy that has been employed where these are literally being traded against each other. And if you don't believe me, look at GME 3 months ago, and then look at AMC. I'm sorry, no, look at AMC 9 months ago. I f***ed it up again. Look at GME 9 months ago, and then look at AMC about 3 months ago. And what AMC looks like now is what GME looked like back in January, and what GME looks like right now is what AMC looked like back in May. So if I go, or you go and try to cash out your voucher for $1 billion and the casino staff tell you to go f*** yourself, what do you think everybody in the casino is going to do? Right? And it's been made very clear that all these retail traders, they're the dumb money. They're dumb money, and we just fuck them all day. It's easy. Okay, so if you make all your money from retail, and then retail realizes that this shit is beyond rigged, such that we can't even get a lucky break, what do you think retail is going to do? And now it's just institution versus institution. Wonder how that's going to go. So, especially considering the egregious amount of incentivization of payment for order flow and fragmentation throughout the markets, such that you can profit even more from liquidity just being moved around, because it's not about the quality of the liquidity, it's the quantity, because that's all that fucking matters, right? Sure. You know what happens when you have too much liquidity? You have all of your fucking markets doing the exact same thing, because whatever happens here is going to ripple to something else, because the amount of friction in which this being traded has an effect of sentiment across everything else is so minute that the slightest of things will just ripple throughout everything else. The viscosity of the markets is way too fucking high. It's not good. This is what will cause a crash. Forget the fucking... Throw out the whole idea that you have all of your pristine collateral tied up in over-the-counter derivatives deals throughout all of the big banks. Forget how over-leveraged all these prime brokerage services are, aka the banks. Forget how over-leveraged these hedge funds are, which get their leverage through, would you guess it, the banks. Forget all of that and just consider how fragile these markets are. Forget the fact of any of that. Consider how you have different verticals. You have equities, you have the bond market, you have the cryptocurrency market. You go through your even warrants. You're going to see the exact same behavior throughout every single market. And that's because there is way too much leverage, there is way too much fuckery, and there is too much liquidity. And because of the amount of information that everyone has access to nowadays, thanks to the internet, which unfortunately is not used for what you would hope it would be used for, because of the amount of the lack of time it takes for information to travel, which is what all of this shit is. It's just data. When you throw all that out the window and consider that, because of how fast information can move, that's where you're going to see this colossal clusterfuck consume all of the markets, is because these fucking people aren't concerned about seconds. They're concerned about nanoseconds. They're concerned about fractions of seconds as far as what trades happen and when. Their entire margins. You're talking about billions, if not trillions of dollars being contingent upon fractions of seconds. And then you try and justify that in retrospect of, oh, the flash crash of 2010. And it's still unclear how the fuck that happened. You have two different narratives. The other one that seems to be more true, we'll say, for some reason has a lot of coincidence in which those who tried to speak out had happened to them, right? You consider what happened in 2010, and then you factor in, let's say, Moore's Law. Oh, technology becomes more and more and more and more capable every 10 years at an exponential rate? Huh, interesting. Interesting. So you're telling me that if 2010 was 11 years ago, almost 12 years ago now, but for easy numbers we'll use 10, you're telling me that technology's capacity for computation has now exponentiated since then. And the crash that we had then was with infant technology considered to what we have now. So you're telling me that not only has inflation gone, I can't fucking whistle. Inflation has gotten even worse. We tried to taper in 2018 and everybody lost their fucking shit just at the fucking drop of a fucking coin, right? I can't fucking remember any colloquialisms. We tried in 2018 and holy fucking shit, could you imagine what happened then? Let's have a little walk down memory lane, shall we? Let's go back to the day chart here. We'll look at SPY, go full screen with this stupid fucking bullshit chart. Let's go to 2018 and look at when we tried to taper. 2016, 17. Yes. Right around here. SPY went from 284 to a low of 268. And then not too long after, you had another fucking situation happen where we went from 292 down to 233. That's fucking crazy. So you're telling me that not only has technology exponentiated in capacity, but inflation has also followed suit. Oh! And now we have more leverage. We have even more liquidity. We got different fucking currency types now too. We have cryptocurrency that we securitized. Oh, we can leverage the shit out of that by 100 fucking X? 100 times? Are you fucking kidding me? You can leverage your fucking cryptocurrency assets by 100x. Oh, but it's transitory. It's fucking transitory! Get the fuck out!
Astro, have you looked at volume versus Michael Burry SEC letter / tweet date and implied defendant, Citadel?
I have not, but I will.
Around the time volume went off the cliff.
It's fucking insanity. It's fucking insanity. So not only do we have more inflation, we have more leverage, faster trading, more trading. You're asking for just a fucking... I don't even know, like, listen, everybody said we wouldn't recover from 08. 08 seemed like a irreparable fuck up, okay? We've gotten by, okay? But now, with this fucking thing in front of us, which, by the way, if you look at the ETFs that have been used as proxy-esque positions to create exposure to these stocks, by the way, look up Charlie's vids. He does a lot of great coverage of this. If you look up the ETFs and what they're comprised of, the majority of them are fucking treasury notes. The other majority, so it was like 75%, 60 to 75% were treasury notes, and then another 5 to 10% were some of the liens that were written by fucking Bear Stearns. Let me say that one more time. Another large percentage of what creates this composite position, this composite financial instrument, composed of liens that were created by Bear fucking Stearns that go all the way back to the early 2000s. Oh, and then what else is in there? IWM, IJR. What do those have a big exposure to? AMC and GME, respectively. Holy fuck. And where does that get fucking traded? Well, how do you convert an illiquid instrument like treasury notes into a liquid asset that you could use to trade against what's going on in the equities market? How can you synthesize exposure to the equities market with something that is only supposed to be traded by the government and financial institutions? Oh, fuck it, we got a market for that. It's got the reverse repo, baby! The reverse fucking repo!